Hello, I'm John Prasinos, Managing Director of Personal Finance and its parent website, Investing Daily. Our latest issue, dated February 27, is in the mail and also scheduled for posting on this website, February 23. Here's a rundown of the stories you'll find in the latest issue. In 2012, the stock market posted its fourth winning year in a row, and so far this year the evidence points to a good 2013. As the first article explains, Chinese equities and the Middle Kingdom's economy are set to outperform in 2013. After slowing growth in 2012, China's GDP is now picking up steam. As the economy grows, it's generating wealth for its middle class, which is increasingly in a mood to spend. We look for consumer names to be among the top Chinese performers this year, particularly as Chinese infrastructure investment slows. Indeed, there's nearly 3 years' worth of pent-up consumer demand in China, just waiting to be unleashed. We highlight the best plays now, including China Petroleum and Chemical Corp., AutoNavi Holdings, a major developer and seller of the advanced maps used in GPS applications, and Golden Eagle Retail Group. In our second article, we point out that the bond market is at its most dangerous in decades. But there are still places of safety in this traditional haven. We highlight 9 open-end bond funds that are no load and low expense, which enables them to take fewer risks to produce a competitive yield. All have produced reliable returns over time while holding losses in bear markets, such as 2008, below those of their peers. Our third article highlights the resurgence of the refining sector. Refiners will benefit the most from the shale oil boom. We pinpoint the best plays now. After years of struggling to make consistent profits and being dumped by integrated oil majors, U.S. oil refiners are making a comeback thanks to cheaper input costs, no refining capacity in the U.S., and a large spread between West Texas Intermediate and Brent crudes. The U.S. is now experiencing its fifth oil boom because of unexpected production from shale plays like the Bakken, Eagle Ford, Haynesville, and Marcellus. The latest oil boom will emphasize the importance of infrastructure and will also allow American oil refiners to recover profit margins they have not enjoyed in years. We look at PF Income Pick Chevron Corp., as well as Valero, the largest independent refinery in the U.S., and Marathon Petroleum Corp. Growth Track shows how the global economy is gaining buoyancy, which in turn is lifting our growth portfolio holdings. Corporate America's latest round of earnings reports tells the story. Better days are ahead for the besieged world economy. So far, the 2012 fourth quarter and full year numbers from our growth portfolio recommendations are strongly encouraging. We look at a few of the standouts with a spotlight on this issue's Best Buy, growth pick Cisco Systems. China-based hackers recently breached the firewalls of the New York Times and the Wall Street Journal, apparently in retaliation for exposés of corruption in China. Moreover, in his State of the Union address on February 12, President Obama cited enhanced cybersecurity as a national priority. These developments underscore the continuing opportunity for growth pick Cisco Systems. Cisco Systems is the clear leader in the technologies that make virtual workplaces function. It's also an innovator in forging defenses for these extended enterprises. Cisco controls 64% of the global market for networking equipment and 45% of the market for corporate security, making it the dominant player in both sectors. Income Report also looks at the latest earnings reports. Solid underlying business health is the hallmark of PF Income portfolio stocks, and once again, our income picks are proving it as they release fourth quarter and full year 2012 results. Case in point, this issue's income portfolio Best Buy, Enterprise Products Partners LP, has increased its dividend for 34 consecutive quarters. In Fund Focus, we look at how the Japanese are expecting a more prosperous year ahead after a rough 2012. Aiming to bring Japan's gross domestic product growth up to 2% this year and create at least 600,000 new jobs, the country's newly elected government is spending heavily on rebuilding areas devastated by the 2011 tsunami and earthquake, reinvigorating Japanese industry, and funding social priorities. We look at the funds most likely to capitalize on these trends in the land of the rising sun. In Article Update, we revisit 4 master limited partnerships recommended last year. MLPs are already off to a good start this year, and so are these 4 picks: Genesis Energy, Enterprise Products Partners, Lynn Energy, and Spectra Energy Partners. And finally, in our On the Money column, we look at the best cash deposits and cash equivalents. About 1% is the highest yield now on cash deposits and cash equivalents. Given such low returns, the focus should be on safety, convenience, and perhaps a tad of extra yield. We explore the major options, from lowest to highest yielding. That's all in our latest issue of Personal Finance, available online February 23. Our team of analysts continually strives to provide you with specific, actionable investment advice. You'll find recommendations suitable for investors of all types and goals. I also urge you to post feedback on our website. In this digital age, we want to foster an interactive, participatory environment with our readers. Your opinions help us make our products as useful and relevant as possible. We not only want to make you wealthier investors, but wiser ones as well. I'm John Persinos, Managing Director of Personal Finance and Investing Daily. Enjoy your issue.